JB here. Hope everyone's doing outstanding. June 17th, 9 a.m. on this fine Tuesday morning. Talk quick about the market. Some names I'm looking at go from there. S&P futures in the red, about down 0.5%, off the lows from the overnight session, but off the highs from just a little bit ago. Retail sales data came in lower, worse than expected. Not too bad. I mean, there's already expectations for a negative 0.5% decline. It came in nearly negative 1%. I don't think that's a big deal. Actually, I think if it does anything, it adds a little more fuel to the fire tomorrow for Fed Chair Powell to kind of spin things a little more dovish. Overnight, I mean, this situation between Israel and Iran continues. It's almost, I wouldn't call it comical because people's lives are in jeopardy, right? And safety and kids and family. It's sad. But to watch FinTwit and some of the headlines last night, it feels like the Weather Channel, right? The Weather Channel, they have a hurricane coming in, and it's like their most profitable time because they have all these people clicking on them because they want to know what they have reporters at the beach, the wind going, the war, just to fill that vacuum, right? And right now, with all the uncertainty of what's going on with Israel and Iran, seems like those headlines and all that stuff, it's like they fill the vacuum with clickbait. And it's just peak, I wouldn't call it peak clickbait, but yesterday you look at FinTwit and all of a sudden millions of followers on Twitter saying, oh, US planes are attacking sites in Iran. And then images, and I think Bill Ackman was one of them who posted a picture of NORAD or whatever not NORAD, the site with all the flight tracking sites of all these US military planes going into the Middle East. And then all of a sudden, Trump is saying he's got to leave the G7 and convene the Security Council. It was like, I'm like, are you kidding? I just think common sense. There's no way that the U.S. can get involved in this conflict. And that's number one. Number two, I don't think they need to, right? So it doesn't make sense. The only situation or issue I think right now is that this last little facility is underground and they need bunker busting bombs, right? The BBBs. And the U.S. has them. So, I mean, it's funny because people say, oh, no, it's more escalation of tensions if the U.S. use them. But they just got to give them to Israel. And they already done this. They've done this back in 2011. If you read the watch list, New York Times has a nice report there. So it's not, I mean, there's much more, well, I wouldn't say much more, but lethal weapons are given to Ukraine as well. So I think that's kind of like the next phase, and we'll probably see headlines on that. But and then you read some of these folks like fear mongering, World War III, you can't bring the U.S. into the war. Like, there's no way that the U.S. gets pulled into this unless Iran does something really, really stupid, right? And of course, there's a possibility for that, but I just don't see. And then with that, then it gives the U.S. an excuse, right? And you don't want Iran to give the U.S. an excuse because that would be very serious. And I think some of it, and you see, Trump kind of like use it. It's almost like he's using it as like a negotiating tool. So go evacuate Tehran because he knows Israel's going to continue to strike until they're done with their mission. So rants for other days this morning. You can see there's some headlines about the escalation in the Middle East, and then a lot about the economic side, right? Big reports this morning. Citigroup downgrading or forecasting gold to drop 20%. That's something I can get behind, right? And then you have the bond king, Gunlack, whatever his name is, saying that the U.S. dollar, it's like at an inflection point. This is the start of the next leg to the downside. And I can remember like it yesterday. He came out and he's supposed to be the bond king. He's like, oh, yields are going to continue to rise. And then yields went from 4% down to, down to 2%, whatever it was, right? So, hey, he is the bond king. He gets the press for it. He's probably called, well, 37 of the $1 crashes, right? If you take a look at the US dollar, historically speaking, it's at like 2-year lows. So it's not anything crazy, but hey, maybe he's right. And so we'll have to see how things play out here. We have the tax bill revision came out, or at least the proposal came out yesterday. Another bad one for clean energy. Then you have that salt cap. So we'll have to see how this all plays out. Supposedly that's July 4th. That's the expectation of when that's going to get signed. Probably not going to happen. So overall markets, retail sales this morning. Then we get the Fed meeting tomorrow. Hopefully Fed Chair Powell just does a little spin on the dovish side, and then I think we can markets find some footing. Also overnight, I posted in the watch list Japan coming out with keeping their rates unchanged, and then talking about scaling back a little bit about their bond purchasing program. They've had very accommodative measures for a long time, and they've been more hawkish. But that was kind of what rattled markets back in August. Then again, we have the fear of the yen carry trade 2.0 coming. That was going to be the next leg to the downside. And now it looks like, hey, that's not going to be a scenario that's on the table. So it's funny how this all goes pushed to the back burner. We'll have to watch here. The SPY opened at 600 yesterday. Here we are at 599.60. So, I mean, it looks rough at a 0.5% down, but I prefer down days like these, at least down opens, and then maybe we can get some support and find a bounce. 597, 606, that's the range I'm watching at. Sorry if I'm talking too fast here. So that's kind of the overall market. So just individual names. Roku gapped at the open yesterday on that news integration with Amazon, their ad platform, and all the way up to 84 and change at the open. I used some of the move to lock my lotto calls in, which came back to life, and I held the rest. And then, sure enough, all the way back down to 80, and then found the last afternoon rally to close at 82 bucks this morning. It's up 84 bucks here. Luke Capital upgrade the stock. I was talking about yesterday afternoon, some of these analysts kind of like discounting this partnership. Oh, they're not going to see revenues to possibly the end of the year or start of next year. But I'm like, this was not baked in at all, right? So I just don't see how this is not continue to be bullish for it. So I I was looking at the July hundreds yesterday. I might pull the trigger if it holds 84, and then we'll see what my 90s open up. If I can get some of those out and use the rest to cover that, I'll do that. But I think it's headed back over 100 bucks in the coming weeks and months. The only issue is I want to try and encompass earnings, but earnings are at the end of July, so we'll see how that plays out. Dell, so finally added more Dell strikes. You look at his pincher. Pinchers always proceed large outsized move. Typically, for me, I'm biased to the upside. Held its 200-day moving average at 110. I added some calls, was able to lock some in to cover costs for 100%, and I held the rest. I think it trades north of 120 in the coming week, so I might add some strikes into next week. Again, don't forget, markets are closed on Thursday. And then Solar Edge, yeah, Tim just pointed out, I'm just so frustrating. Was looking great yesterday. Actually was in the red in the morning, bounced into the green solidly over that 2260 handle I was pointing at. That's third time as a charm. I figure it was gap and go again today. And then sure enough, after the close yesterday, the tax bill proposal gets put out with easing those tax credits even sooner than expectations, and those solar energy, green energy just getting pummeled. I mean, Solar Edge closed at 24, it's down here at 16, so it's pretty much down 33% for solar's getting pummeled. The only reason, I wouldn't say the only reason, but on Friday when it started to run, I figured it might be a short squeeze. So that's why I got those July strikes. My Junes are back to life, and now it's like all you can do is bang your head up against the wall. You can't control it, right? So you can control what you can control, which is trying to find opportunities that you think are going to pay out. Unfortunately, it's not going to pay out. So unfortunately, I'll have to stare at the July's pending any crazy update. But you never know. There could be another revision on the tax bill. That's that. Other names. So I was watching Reddit, and at this time yesterday afternoon, not this time, but yesterday afternoon, I said, oh, the 140s look expensive on a risk reward basis. And sure enough, those 140s are going to look even more expensive because Reddit's gapping higher this morning. I was saying yesterday afternoon, too, it's one of those names, once it gets going, it's going to be 150, 160, 170. So don't be surprised I add some crazy out of money strikes here today, play for some really monster moves. Serve and Joby, solid green days yesterday, but wanted to add some more strikes. I'll just continue to be patient, especially on serve. I think it's head over 15 bucks. Might look to add some strikes today. We'll see. And then MDB. I mean, take a look at this. Outside that move on Thursday, I mean, it looks like it's going to gap fill. And if it gaps fill that 199 handle from post pre-earnings and it holds that, I think it reverses. So if that's the case, I think it's had some outsized moves similar to when you have a pincher, right? MDB can be volatile. So don't be surprised I had some strikes there on a bounce. Still have my eyes on W and Lemonade. Lemonade's back here at 42 bucks. The thing, I was looking at W, but then you start looking at RH, and RH is like melting. It's like almost looks like RH is going to head back down to 170. So I don't know if that's just a sign as folks are pricing in lower consumer demand. I don't know. So that's about it, folks. I'll be back on audio later. Let's have a great day. Rock and roll.